Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Friday, August 11th, and we are wrapping up the second week in August, which has been a bit of a volatile, ugly week for both crypto and equities. And I think a lot of it, can be explained with how we typically start with the dollar. And dollar was obviously rising past couple of weeks, actually really, mid-July into August, and then was kind of flatlined for the past week or so. But now, as you could see, as we speak, it is, inching higher. And the higher it inches, the tougher it becomes for equities and crypto, i.e., the risk categories to move higher. So if this, this is obviously breaking the 102.8 level. If it obviously confirms and moves higher, it will likely be a detriment to most risk assets. Now, when we talk about that, what is the detriment? Nick, the equities have been straight down since July, or since kind of end of July. Mid-July was really where that top was, and then obviously ran the highs and drop back down. But equities are now below these 44.80 lows, which have been very important in terms of how we've been looking at the market. Let me go to 4 hour. I don't know why these times don't like each other. Let's do 4 hour. Here we go. Okay. So as we can see here, just the way that I'm looking at this is a very large and important range, considering most of June into July. So basically a 4-week range right here that we ended up breaking out of, right? And then so now we are deviating back into that range, right? So anytime we have a deviation and that deviation confirms, and as long as it stays below this level right here, it is confirming, that typically means we will end up heading lower. Now, the first stop, in my opinion, is 44.40. And then the second stop will be 43.80 if we make it all the way down there. There will definitely be some chop in the middle. As you can see there, we got some lows here, coincides there. We've got kind of these highs right here that also coincide with that. Not too much trading right here, but obviously we are getting stopped, at that level. So if it actually breaks below, I would say 44.60, it's got pretty much a straight drop to 44.40. So very much something to consider if you are bullish equities. And I will say it does look to be confirming, because the 4 hour jumped up, and then came back down, which is another kind of deviation. Very ugly wick here. So in my opinion, it's likely to drop to 44.40. But if you're not already short, you should probably wait for a break below 44.60, which was the recent low for this morning. Or, if we do end up jumping back, or if we end up rejecting off of 44.80, this could be a good short opportunity here. But again, it is Friday. I wouldn't recommend jumping in anything. Obviously, equities are going to take a break for the weekend. We'll have a reset Monday. And let's look at what the previous Mondays were. So last Monday was bullish before giving it all back. And then the Monday before that was actually kind of bullish before giving it all back as well. So Mondays look pretty good for the stock market. So I would not short this. I would be patient. If it does end up reclaiming like this on Monday, then we'll probably have a green week and target the 45.10 number. But we do have to be mindful that if DXY does officially break higher above that 102.8 level, that kind of idea could be moved, and we could have a less than stellar Monday. So very much to consider, but obviously, it's a Friday. There's no point in jumping any equities trades now. But, the larger context, we deviated back into the previous range. That is typically a bullish maneuver on a higher time frame. So if we cannot hold the recent lows that we formed today, we will just likely end up chopping lower. And the big point that you need to get above is basically the high from this 4 hour candle, because as you can see here, we've got all these wicks just kind of chilling here for the past actually since yesterday afternoon. So clearly, and look where that lines up with. It lines up right here. Actually, I could probably just draw a line. That'll probably be easier. So this high coincides with the resistance that we've been facing right here. So, and which is the top of the previous range, right? So I'm just going to keep that there. I probably should have had that drawn earlier. And this line right here dates all the way back to the high. The reason I have this one drawn, it does look a little bit wonky in the context, but it's the high from not exactly the April high, because the April high is up here, but this was a very important time on the chart considering it just absolutely nuked from that level down. So keeping a close eye on that one. And as you can see, it was support, as we were chopping down. So very, very important level, this one right here. So we'll keep an eye on that heading into next week. Definitely doesn't look very positive right now, but we'll see how Monday reacts. So looking at Bitcoin, I actually drew this formation today. It's kind of a falling wedge, and I thought it was interesting because this 29.2 levels is been important in my book, just because it's the previous weekly VWAP, and we did have, we've had a lot of trading at this level. If it does drop below the 29.2 level, then we'll look for 29.1. If it drops below 29.1, then we'll look for pretty much one of these lows on the chart down here. You can't really see it too well, but if it does drop below 29.1, we'll look for 29.8, maybe 29.7. But seeing this 29, you're seeing it hold just above 29.2 and tap the descending wedge. Typically we'll have a nice little bounce, and we did, and the candle body closed beneath the lows from Friday morning, as well as above the lows from Thursday, which are not exactly the lowest point on the chart. That is obviously down here at 28.7, but it is the lows, from yesterday. So, important to close above that. Obviously, we are dripping a little bit lower, and I will be honest, I did enter a long down here in this level, saw the tweezers, saw the bounce, took my shot, targeting, considering, like I said, we closed above these Thursday lows. That's, good sign. So I'm looking for it to do something like this and jump up to maybe, mid 29.4, maybe up to 29.5. And then we'll look for more shorts down here or an acceptance and above like that. Now, obviously, this trade is not foolproof. This is a very risky trade. But I did see a bunch of OI drop. Figured some buyers would step in here. It does seem to be the case. RSI is reset on LTF or lower time frame, I should say. And then stock RSI is also looking a little bit reset. But this is it could very, very well seep lower, and that's why you keep a stop at the lows and define your risk very clearly, because this is tough sledding. But kind of looking for a bit of a repeat of what we've seen at these lows. Get a little scalp long. We'll see how it plays out. Not the best trade in the book, obviously, with DXY rising, but we play the levels as they are given, and that is the case. So if we, just to zoom out again, just because I'm in this scalp and I recognize it's a scalp, and the scalp could certainly fail. So if we drop down, if we drop below the recent low 29.5, then I would expect, it to basically sweep that low and hold 29.2. If we can't hold 29.2, then we're going to drop to 29.1. And if we drop from 29.1, like I said, we'll target these lows. But it gets very tough down here just to call for a complete dump because of how much trading we've had in this little area. So I would expect, kind of 29 to 29.2 to be a nice little demand zone if we do end up dropping down there for bulls to step in. And doesn't mean that they will win, but I definitely expect some buying to occur down here. And any sellers who are selling hard into this area likely will not be immediately rewarded. So that is something to consider. I could always be wrong, but this is typically, how we approach these types of trades. So looking for kind of 29.2 on the most ideal trade, but took the scalp because that's what the system says. And we had a nice little bounce off of, the descending wedge. So we'll see how that ends up playing out. Ethereum, oddly enough, pretty strong buyback. I mean, it is a bit of a Darth Maul candle, nothing really descriptive on the 1 hour, and it obviously closed beneath the weekly VWAP. But I will say, very similar to how we were looking at Bitcoin, closed above these lows from yesterday. So it swept yesterday's lows, closed above. We're obviously below them now. Doesn't mean we can't come back. So if you are long ETH, I would probably, I think the safer bet probably be, long on a reclaim of the weekly VWAP. And then you can trade that up to, either this high, the 1860 resistance level, or, take if we do break this high, that is a bit of a market structure break. And that would honestly be a pretty good trade up, and then you would probably target one of these highs here. So that is something to consider. Market structure. Remember, it's just forming lower lows, right? And it's forming these lower highs, right? So if we can break the lower high, so I'm sorry, these are lower lows, these are lower highs. So if you can break the lower high, that's a new market structure. You now have a higher high, and then you would expect a higher low. And then, then that would kind of change your trajectory. So you'd want, a higher high here, and then you'd want a higher low here. And then price, does something like that. That's the ideal situation that we'd be looking for. So of course, longers here may be early, but when we see these types of candle closes, it's certainly indicative of a possible bounce. Doesn't mean it will happen, but that's why you take the scalps. That's why you define your risk, and you get in and you get out cleanly. So just to make a little bit more sense, like we did for ETH. So like we did for Bitcoin, again, 1860 is a big level in my book. There's been a lot of deviations, a lot of bounces around it. So, get above 1860, really good things can happen, but we do have to watch out for this high up here at 1876. Anytime we're looking at highs, and obviously if bulls were probably trading up to this high and didn't even get up there. So, always be aware of where your recent highs are and your past weekly highs as well. And then if we trade lower, it's going to be tough sledding because you got this wick down here. So it's really tough to be shorting anything after seeing a wick like that. But if we drop below 1838, 1840, next stop is likely 1830. And then if we drop below 1830, we're likely to tag 1806 because of this last low. But anyone who's shorting, below 1830, if that does present itself, should be aware of these lows right here. Obviously, during this week, those were big problems for anyone who was shorting that level. Obviously held it very well. Then we had this dump down here. So this low, in my opinion, is a bit more important because it's the current week low, and it'll definitely very much play into how we're trading after Sunday, because obviously the week will start Sunday evening, the new week, I should say. So we'll have to watch out for that. So if you are shorting here, my just one suggestion is if you're targeting here, just be aware of these lows as well. They could, trip you up, and, price could reverse before, getting to that 1800 target. So very much something to consider there. But for the weekend, I'm not expecting too much action. Obviously, we're getting some good volatility. You get some good air quotes. At least it's something. If we look at Bitcoin, it's literally been trading in a $100 range for the past 24, 48 hours. Got a little bit of juice. So let's see what comes of it. Again, I am scalp long, but not extremely confident on it. But that's why you have stop losses. That's why you manage your risk appropriately. And then, I would expect us to just be more or less flatline. If we get up to 29.5, maybe we short back down to 29.3, 29.2. I'm not entirely sure that, this chop has just been absolutely disgusting. I'm just playing the rips and the dumps as they are meant to be played. And hoping that we get a little added oomph on one end of these. So that's really what I'm looking at. There's been no change in OI for the past several days, and that to me is indicative of a lack of interest and likely a lack of volatility heading into the weekend. Weekends are low volume anyway. So in my opinion, it'll probably be a boring weekend. I'd be shocked if Bitcoin is below 29.2 or above 29.8 throughout the weekend, but we'll have to see exactly how that plays out. So again, I'm scalp long, probably up to 29, mid 29.4, maybe 29.5. Then I'll probably get out unless we have a strong, buyback around that level. And then we'll just look for new trades. Hopefully we'll get another good setup on Monday, like we did last week. Our trade Sunday going into Monday was the dump, and then if the dump held, we longs. That's exactly how we played it in the TTC community. I'd honestly love a repeat. Maybe we get up here by Sunday, then we dump back to the lows, then we long it back up again. That's easy trading. Unless you're a spot holder, that's not very torturous. That's actually beneficial. So that's what we're looking at. And obviously, equities are, looking hairy, but again, we'll see what happens on Monday. We've seen some positive Mondays before, dumps following that. So we'll have to see how we react at this critical junction. But to me right now, we are back in the previous range that is bearish. The only thing that's going to get us back out is a clean break of 44.95. Basically this 44.95, 4,500 level is going to be a bit of a seller's demand zone right there. So something to consider heading into next week. So good luck. Happy trading. Speak to everybody next week.